Call it a tale of two fintech stocks. SoFi surging more than 20% in May, while Coinbase has lost more than 30% of its value. But they weren't the only big movers. Kate Rooney joins us now with the winners and losers and how the rest of the year could be setting up for the space. Kate.
Hey, Melissa. Fintech not having a great year so far, but there were a couple outperformers as we close out the month of May. SoFi was the big winner. Robinhood eked out about a 2% gain in May. It doesn't sound like much, but it's a lot better than some of the other fintechs. You got Coinbase, Block, PayPal, Affirm, all ending the month negative. Affirm this morning was looking like it was headed for a gain. Not the case, though. For the month, it did see a loss in May, and it's down more than 71% year to date. JMP Securities is among the Wall Street firms doing some bargain hunting in the sector. They looked at net cash relative to market cap. Top of that list, you've got Root, followed by Robinhood and Bakkt. And plenty of headwinds out there still for the sector, but JMP calls it a good starting point for value. Companies with more cash tend to be in a better position to go on offense with spending or M&A in a downturn. They also rank the most attractive valuations based on earnings projections, calling out names like Curo, that's a consumer finance company, NerdWallet, Upstart, LendingTree, and Rocket, all expected to see double digits earnings growth while shares are still in the red year to date. And finally, guys, short interest. Upstart, Lemonade, SoFi topping that list. If sentiment changes, the shorts may have to run to cover their positions, which JMP says could pour fuel on a rally. Melissa, back to you.
Kate, thank you. Kate Rooney. I like the earnings growth metric, Steve Grasso, because do we know what earnings are going to look like? I mean, we were just talking about what earnings estimates should be and how we don't really have a good handle on that, particularly for a space like this that includes the likes of mortgage lenders.
Yeah, 100%. And when specifically with SoFi, all of these companies have been painted with the same brush. If you're a growth company, you don't have any earnings, or if your earnings are going, your cost of capital is going to increase. But you know what's interesting? If you look at PayPal, PayPal's down 55% year to date. That's one with deep pockets. So it's almost as if they don't like the space as a whole and not just where you are on the market cap scale. But I would still be a buyer of SoFi just on a technical basis. This thing is way, way oversold still.
To me, SoFi, it's come in a lot for sure, but I still think that disconnect between old line banks that make money and get a very low PE and, you know, a new bank or a SoFi or lots of others have just a wildly different set of metrics that ultimately I don't understand how that discrepancy can maintain that kind of giant chasm.
So the old-time banks are cheap, or are these stocks absurdly expensive?
I think both.
Yeah, well, I agree. And, you know, SoFi has three things going against it. And it's, I think, probably a very well-run company. I want to be careful because I just think the dynamics are, it's still a consumer credit company on some level to me. It's a high multiple stock and a high multiple bloodbath. And it was a SPAC. And if you think about what went on, there was just people out there shorting SPACs. So some of this actually could be, you know, once you've worked through that, there may be, you know, this is essentially short interest in this name that I think could start to unwind.
A lot of these names were coined innovation stocks, Bonawyn, and then, you know, years later, and particularly after the stocks have declined a lot, people want to take that moniker back.
Yeah, innovation, SPAC. I mean, but all of those are reasons why. Listen, when you're setting up a screen of names that you're going to filter out and then do deeper due diligence on, this SoFi specifically is one of those names that hits so many of those screens where you would establish a short position. And I remember this was a final trade of mine a few weeks back, maybe about a month back. And I thought that it had already declined about 50%, and then came out like the Biden news in terms of whether or not there would be an extension of the moratorium and whether there would be a certain amount of loan forgiveness. And I didn't think that that was new news. And the reason why I thought this had like a potential for a short-term pop was because it seemed like what had already been priced in was continuing to be ratcheted down on the name. So like Tim has mentioned, I think there are trading opportunities in names like that. I think this is kind of a poster child for one of those names that kind of gets caught up with everything else, irrespective of what the business model is.